Hello traders and welcome to another video review. Today is Friday, June 3rd, 2022, first Friday of the month, which means today we will have a non-farm payrolls Friday. So pretty much volatility will be increased. Let's find out first what else do we have in the Forex calendar today. So, as you can see, overnight not too many data had been published. Services PMI from the Japan beats the expectations of 51.7 with the actual reading of 52.6. Home loans in Australia decreased minus 7.3%. Forecast was minus 1%, which is a deep below the expectations, so the home loans are not that popular in Australia anymore. Some data from the German trade balance and services PMI, as you can see here, and then of course at 10 o'clock we got the services PMI, retail sales and market composite PMI data from the Eurozone. 12:45 in the afternoon we got the ECB area will give a speech, and then of course the main event of today, 2:30 non-farm payrolls from the US and all of the rest of the labor data from the US, including the unemployment rate, which is supposed to drop from 3.6% to 3.5%, one of the lowest in the history of the United States. Moreover, at 4 o'clock we got the ISM non-manufacturing PMI, and then of course we got the plenty of the data regarding the US rig count, which is a US Baker Hughes US rig count, so the crude oil related data. We got the CFTC speculative positions data published today from the Nasdaq, SP500, the crude oil, British pound, gold, and so on and so on. So very interesting to see what is the change of the speculative net positions on the futures market as well. However, we will not talk about this one because we will just focus today on the euro, dollar, S&P 500 and gold, because those markets are the markets that will react on the today's NFP data. Please remind you that NFP non-farm payrolls are expected to drop from 428,000 to 325,000. So any number that beats the expectations and beats the previous number will be a big positive surprise for the markets and might result in nice rally at the end of the trading week. So let's start with the star of the recent trading days. What I mean is of course the US dollar index. Well, the US dollar index is following our scenario, as you can see here. We recently indicated that we might of course complete the wave B of the overall ABC market correction. Let me just move this one because it doesn't actually want to. There you go. And what do we have here? We got the wave A completed. Let me just move it so you can see the wave A bottom somewhere around the level of 101.26. Wave A is completed, minus 3.58%. Then bouncing in the wave B, bearish engulfing pattern on a daily time frame chart. Let me just zoom in for all of you to see bearish engulfing pattern on a daily chart. So what do we have here is of course another possibility to decrease lower. Where is the target? The target is around the level of 99.38. Actually, we don't need this measurement anymore, so let's just get rid of it. Local resistance 103.16, then 102.35. However, as we already know, all of these corrections are smaller than the newest one, so there is no point of keeping them here. We might however see something like this, the wave A of the wave B of the wave B, and maybe wave C of the wave C, and then decline. However, there is no such an indication. It's still possible, but the indication for now on the US dollar index is that the wave B had been completed, and we are waiting for the wave C to the downside, targeting 99.38. If the US dollar index is going down, what should go up? S&P 500? Maybe? Anyone? What do we have here? Well, very interesting thing. Breakout above 4,137, the key supply zone. Very interesting. It looks like a 27% won't be hit anymore, so I will delete it. Looks like the bottom for the wave C in form of the wave 5 of the overall ABC correction has been done. This is of course now broken, so that zone here, 4084, 4137, is now a technical support. So this becomes of course green. This becomes green as well, and the last become green as well. This is the zone for the of the support. As you can see, this level has been tested many times. 4084, the low was 4072, so 12 points lower, but you get the points, right? We got the pullback, and then very nice bullish engulfing pattern. We are targeting today the level of 4,312. This is our next target here, and I'm just wondering, okay, let's just remove these levels here. They are no longer needed, as well as this one. So we got this nice room here. However, I wonder how much we retraced already during this up move. How much we retraced from the last wave down, right? The wave C, 5 waves down, decline is it's pretty much obvious. 50%, 4,227, that's the level, but the 61% is let me just put them above the on the top of the line. There you go, 4,324. Very interesting zone just below the long-term ascending channel. That might be the target for today's rally, if of course this rally will happen. If this rally will happen, then this is the target for the boost. 4,227, 4,324, stronger target for boost. So US dollar is going down, S&P 500 going up. What the euro dollar will do? Now this is a tricky one. Why? Because in the long term we have a downtrend. Of course, this is the blue descending channel we've been tracking for many weeks now. We got in the short term, on a daily time frame chart, tested the level of 1.0643. Nice bounce here, engulfing pattern again on a daily chart. No new high. However, the recent high was made at 1.0787, and if the markets if the NAP number beats the expectations of the market participants, we might see another rally, because it will means that basically risk is on. Yeah, risk is on, and in the short term we might break above this weekly high 1.0787, go towards 1.0809, and if the number is really big, we can even finally test our key zone here, the supply zone. Let me just put it on the screen. There you go. This is what I mean. This is our zone, 1.0922, 1.09. This is like a 49 or 50, barely 30 pips of the zone. However, it's a key zone for the market participants. If we take a look here, we can see that any breakout above this zone will open the road to many places. We don't need this one here, especially towards the next important zone. If I still have my rectangle, let me put it on the screen. This is the next very important zone as well. So rally on on the euro dollar, who knows, maybe the better than expected data will trigger the rally. However, if there is a situation when the data are worse than expected, we might see bearish sandwich, which means another red candle here. So euro dollar might go up, might go down. We will see what the data will be, what the market reaction on data will be, which is much more important. And the last but not least, the other thing that I would like to take a look at is Bitcoin. What is Bitcoin doing? Bitcoin tried to rally, however it failed. Let me just zoom in. Look at this daily candle. This is no good at all. This is a bears getting angry, and they are selling and pushing the prices lower. If this candle becomes red, not good at all. We can go below the low of the Wednesday, 29,328. We will again trade below $30,000 level. Then of course the target is 27,929, or even the lows from the 26th of the May, which is 27,585, and the breakout is ready. The momentum is back under the level of 50, which means it's negative, and the negative sentiment on the Bitcoin prevails, and it's still possible. So maybe there will not be even a test of the upper trend line, and we just keep going lower because the bearish pressure is so big right now. It's increased for sure. It's increased for sure, and it looks like the bears wants the lower prices, and I already follow this scenario, this red scenario, which is the missing wave on the Elliott wave count, on my Elliott wave count. So this wave is very, very much welcome. The down wave towards 23,999 or $24,000 for one Bitcoin. That's everything for me for today. Please remember, highly violent day today. NFP payrolls, plenty of data from the Eurozone, plenty of data from Germany, from the US economy as well, not only from the labor market. So please stay vigilant and keep an eye on the important levels to see what is the market reaction and how the market is responding on the data. Thank you very much for watching this analysis. I hope I see you guys on Monday. For now, take care and bye-bye.